All right, so let's start. Welcome to Tuesday. Hope you guys have a good weekend. As a form of disclaimer, there's more on the website, or not here to give you any form of advice. It's just for educational purposes only, and that future results is not indicative of past results. So, if you have any questions, feel free. Other than that, let's look at the markets. Let's go through here with the dollar index. So, if this one will be ignored, hang on a sec, where's the adaptation tool? And put it at black canvas right there. Okay, if you just have this, then what do you see? If you only have where the closing price is way higher than the opening price, so what does it mean to you?
It's a strong candle or it's a buy candle.
Okay, how about yourself, Daniel?
Yeah,
Okay,
same here. It has force, almost no wick.
yep,
It's by candle.
so it is a buy candle, and then what happens if we just move one candle to the left right here? Let me maximize it actually. All right, now that we have that, you have a gravestone doji, meaning that the closing price is almost as the same as the opening price. Below there's a buying pressure and then selling pressure in the end. And if you combine that too, what does it mean to you now then as an analyst?
I think situation isn't much different in the end because it's a buy anyway.
Okay, how about yourself, Perry? What does it mean to you there? If it's talking to you, giving you some form of yeah, if it's like the wind talking to you,
Well,
what does it say? What is it saying?
um, I'm going through Steve Neeson's class on YouTube, and if I remember right, it starts a reversal probability or something like that. So
Okay. How about like based on okay. This is sometimes where the challenging part, right? Okay, so let's look into this one. Uh, Opening price is at 93.03. Opening price 93.06. Closing price 93.04. Opened at 93.03. Closed 04.03. So 1 pip. Low is 93.01. Um, so if the price is at 93.03, that's where it opened at. Opened at 93.03. Low is at 93.01. And it closed at 93.04. So that's double checking. 93.03. Closed 93.04. The low is 93.01. So if you have all those values, all those numbers, what does it mean to you then as an analyst? Currently, the
that
price
I
is
don't know.
93.58. Okay, 93.56.
Yeah. This
Um,
is the part I'm still struggling with. I went through your class on this one, and I'm going to go back through it because I struggle with this one. it for some reason.
Okay, no worries. How about yourself, Daniel?
Are we talking about the doji candle?
So the doji closed at 93.04. The low of that doji is 93.01. And then here it opened at 93.03. So this,
Okay. The open is for the bullish candle.
uh-huh.
Okay. All
Here
right.
it's the low. And it closed right there.
Hmm.
So if you're focusing based on just over here, what does that mean to you?
Could
So make it this way. You are in the farmer's market. And you want to buy some apples. It'll cost you simply the lowest price of that box of apples at $93.01. That's the lowest, basically, from yesterday's price. Now you want to make an offer below 93.01. So if you are offering, say you made an offer at 92.89 because you feel that it is going to it shouldn't be, it should drop in terms of price. So you made an offer to the buyer at 92.89. Okay, so I'm sorry, to the seller at 92.89 because you want to buy it, right? Now the opening price was at 93.03. The closing price on the other hand is also 93.04. So you making an offer at 92.89, the seller didn't want to offer it to you. He said, or the seller basically said, you can buy it from me for 93.03. So, and then your answer is you said no. And you made another offer. You made an offer at 93 flat. You said take it or leave it. And then all of a sudden, I come in and I'm going to say, hey, you know what? I will make you an offer at, based on what you're asking, at 93.03. And I basically said, I'm not just going to buy one. I will buy 2 boxes at 93.03. What do you think the seller would do?
You would probably say,
Sell it.
yes, great.
Absolutely. The seller will actually accept it because, firstly, he went to you and said, no, get it at 93.03. But you said no. And then another person did come in and they didn't buy one, I bought 2. So what do you think is going to happen now through there? So based on demand, So just imagine currently you're in an auction place. So Harry, you're into farming industry. So
Mhm.
if you're gonna buy a lot of chickens, you're gonna buy at a wholesale price, you're gonna buy at a retail price.
Wholesale price.
So your procurement manager or whoever is buying it, is he gonna make a lot of offer where he's gonna buy in hundreds at a cheaper price, or he's gonna buy, say, in tens or a few with whatever he's got? Or do you think it's more feasible to the seller if your buyer will say, hey, look, I'm going to buy 200 chickens from you for this price? And of course, what do you think the seller is gonna do? He's gonna say yes or no if he's willing to buy a lot. What if he buys all of the chickens at a certain price?
Well, I mean, he'll say yes.
Because I guarantee it's probably not just your company who's buying those chickens, right? A few companies will be buying some chickens somewhere else in an auction place, somewhere.
Yeah.
True.
Yep.
And
I'm sure they are.
you're not gonna be buying at retail price point. They will go to a wholesaler price point, or wholesaler place where they sell a lot of chickens. True.
Yeah. Yeah.
And then your chickens, either you sell it to the retailer, or depending on what you do with the chickens, either eggs. But if you're just gonna sell the chickens, do you sell at retail price point or you sell it at wholesale price point, Perry?
Well, that's beyond me, but I'm assuming they sell them at wholesale price point. I don't control that part, but yes.
So if I were you, ask some questions, because that's the business that you're at, right? You're the one, yes, looking at the chickens, making sure that they are going to be healthy. Because if they're not healthy, who's going to buy those chickens? No one. No one's
Yeah.
going to buy those chickens. So you have a big role or big responsibility as well on your part. If you want to be interested in terms of the business, ask some of your workmates and said, okay, how much you guys sell it for? And then where do you sell it to? Or who do you sell it to? Because if they're going to sell it to another person, because it's like a big pyramid scheme, basically. That's what business is all about. There's a manufacturing price and there's a wholesale, and we'll go to another wholesaler and another wholesaler sell it to the retailer, and then the retailer will also sell it to a retail price point. So for me, those are the ones that are, it's not good business in my opinion. It's like you buying and selling stuff on eBay. You're buying at retail and you're going to sell at retail. So your margin is only very small, but where you want to make money on is you're buying at wholesale. Let's say you're buying clothes, t-shirts and stuff. You're not going to buy t-shirts made in America. It's too expensive. So where are you going to buy the t-shirts from? Either buy it in Vietnam, buy it from China, buy it in Haiti or Mexico or Honduras, where things are cheap. And then if you want to sell certain products, and why do you think there's the Chinese and the US relations or trade relationship is because of cheap labor. So most cases go through third world countries in order to buy the products. And like your phone, Apple phone, Samsung phone, it doesn't matter what type of phone, your computers, where they're all assembled from. China. Everything is made in China. Why? Because it's cheap. As long as, based on trade relations, that China is not going to increase what that number or what the price is going to be in terms of the amount of currency. That's why even though the Chinese yuan is fluctuating up and down, the Chinese yuan, it has to be set to a certain price. So Americans or any part of the world would be able to buy the products basically in China with a certain price point. Or else if they're going to increase it, what do you think is going to happen with the prices once you're selling it now in the country where you're at? Doesn't matter you're in Germany or in the US. The price will also increase. And what do you think now what happens is, say here, for example, you go to Walmart. Walmart is simply one of the thermometers for the whole economy. And the reason being is because people who are not that rich, who make a minimum income, they will buy their stuff at Walmart. It's cheap, good prices, And if the prices will also increase, and then just imagine the hourly rate or what they're receiving is not increasing, or unemployment increases, then guess what? No one's going to buy, and this is where the economy is going to tank. So see how the whole cycle of the economy, basically how it operates that way. And if people are not buying, businesses will lose. And like right this point in time, what do you think the banks are currently doing? They're going to print more money. And if they print more money, they will decrease the interest rate. They will lend it out more to people in order for the economy to keep going. That's why if there's no debt, there is no economy.
Mm-hmm.
As long as there is debt, you will have an economy, regardless whatever it is. And they're going to keep on printing money, and that amount of debt, the trillions and trillions of dollars, will keep on going. So the question is, where is that money coming from? Nowhere, because it is just a piece of paper that doesn't mean anything. But however, this valuation that's being put in, it's an illusion. This is why everything around us is just an illusion based on what you see at this point in time. It's amazing how the Rockefellers basically created this thing called money, and it's not even backed by gold, because in the past, gold has a value. And prior to that, cocoa beans was worth more than the value of gold. And that's what basically the Mayans, or what they used to use to trade in terms of currency, was cocoa beans. And then when the Spaniards basically went to South America and they thought they were just basically a piece of poop, they threw it out, but in actual fact, that's meant something. And see, the Renaissance, and sorry to say, but Europeans basically screwed everything up because of land, right? So all these things. So, but nevertheless, without digressing, if you are buying, just trading is like an auction house. That's why if you can fully understand the mechanics of buying and selling of price, it doesn't matter what you'll be trading, whether the dollar index, the euro, the Aussie, if you're buying an ETF, Apple, buying a stock, buying the ES as a future price, or the YMs, a chart is a chart. And then this is where the markets, or whatever you're trading, is actually talking to you. It's telling you something. So if no one's giving you, or it's telling you that it's not going to be worth more than 93.01, and the price is going up, then definitely there's more demand than supply at this point. So currently, sellers are in control based on price. What I mean by that? It means that if you are a seller and there's demand, you have the power to ask whatever price you want, because another person around the block will make an offer higher than you because they know it's in demand. So for example, Perry, you know that winter is coming and it's going to be challenging to keep these chickens healthy.
Mm-hmm.
What do you think is going to happen to the demand of chickens when there's not going to be enough supply?
Well, the prices will go up.
Exactly. Especially because it's more challenging to look after them. Not only that, it increases as well in expenses, because the heat, the heating expenses, all the type of stuff will also go up, correct?
Yeah, that's what I was going to say. Propane, that's like my boss, they buy millions of gallons of propane in the summertime. So, because they have 8 farms to keep warm in the wintertime. And we use about 30,000 gallons on the coldest part in one flock. So,
and perhaps wintertime is when they sell the chickens at more expensive price, correct?
Yeah, the winter flock, they don't make any money basically.
Exactly.
My bosses hardly make any money, but then in the summertime, that they have one flock where they make up for all that. So,
gotcha. So just one second. The dumpsters. So if that would be the case, and now there's a lack of supply of chickens, because all of a sudden people would love to eat chickens, or at certain places where there was, say, for argument's sake, there's a virus that basically happened and it killed certain chickens, and now they need to sell chickens to certain places, and there's not enough supply of chickens. That's where chicken will actually become very expensive. And this is how supply and demand basically operate. So right now, there's a demand for the US dollar. That's why the price is going up. So the question that we have to ask ourselves is that, why is it that the price didn't go below 93.01? So if the price didn't want to go below 93.01, then something is supporting that price right there.
So you're looking for, the answer you were looking for is if that was a supply or demand area.
Bingo. So that is a demand area,
Okay.
because
Didn't get it either.
because they're supporting, right? And this is your terminology, support and resistance.
Okay.
Support means that buyers are supporting this price, because if selling pressure is here, then technically that shouldn't be a bullish candle. That should be what? That should be a bearish candle. But at this point in time, it should be here. The price should drop. So the question is, why didn't it drop? Because sellers are not willing to sell below that particular price point of 93.01. It's basically, you go to the seller and said, hey, look, I'm going to offer at 92.89 or 92.90. And the seller will just tell you, fuck off, because it's too cheap. I'm not willing to sell it to you at 92.89. You want it? Either you go and buy it at 93.03 until someone will make me an offer, or someone will accept my price. So who's in control? The seller is taking full control, because they're saying, I'm not going to sell you anything lower. I'm going to sell it to you at 93.03.
Hey, Reynaldo, you cut out. So
Oops. Okay. Hello.
there you go. You're back on.
Got it. So unless an institution knows exactly what's happening and they will make an offer at 93, highs and lows in terms of price, because it cannot be you, it cannot be me. It is only a big bank or someone who has a lot of money will create that offer, because it's not only one contract, two.
You cut out again.
Okay, hang on a second. Hello, is that better?
Yeah, you're back on.
Yes, that's weird, because it's getting on and off from the Ethernet. Let me go put it back in the Ethernet. Just one second. Yeah, so this is where the understanding that once you get this, it becomes really, really easy. Hello?
I can hear you.
Yeah.
Me too.
It is an institutional price point for the highs and the lows. So if the opening, say for example, the opening is also the low price, and that low price or the opening price is being dictated by an institution, then you have to be with it. And this is also where peaks and troughs are very important, because the trough or the last low, that low of 93.01, if you go below 92.89 as a stop loss, you're pretty much safe, because that seller who is, or a buyer who is offering below 93.01, and if the seller told you to piss off because he's not willing to, so it needs a lot of influence in order for the price to drop below 93.01. So that influence would be an outside news. So this is where peaks and troughs are I call them guaranteed stop losses, because it has to be an institution to go below 9301. It cannot be you, it cannot be me. So if you get taken out, then simply the odds probability or the continuation of the price to the downside is highly probable basically from here. So, but nevertheless, that square box will be an area of demand or demand. See how that price alone. So notice from a bearish candle to uncertainty. And hence, that's why this is strong, is because if you have this bearish candle where buyers are in power, meaning they have the power to dictate in terms of whatever price they want, because there's no demand, there's supply. There's more supply than demand where price is dropping. Then all of a sudden it is being supported by this price, and all of a sudden you have a bullish candle. So what does it tell us now as traders? Where the price, notice here, the high of 93.58, the high of here 93.59. 1 pip. Why is that happening right now? Why is that happening right now? So let's look at it from a buyer's perspective. What does it mean to you when the price is not going beyond a certain high price point? Because firstly, you have to ask yourself, is the price now at retail price point or the price is at wholesale price point currently? Which one do you think?
It's a retail price point.
Would you agree, Perry?
Yeah, I think so. I really don't know what I'm talking about, but yeah, I'll go with that.
All right, absolutely. Okay, so let's go back to the chicken example. So if you're selling your chickens here at $93 basically a pop, and price is now at $93.56. Well, the last one was $93.58. So that is 50 cents more expensive than what you should be buying it at. So if you're a wholesaler, will you be buying your chickens at 93 bucks or you be buying your chickens at 93.50?
93 because
Exactly.
you're selling, they sell 2 million chickens a week, so that's a lot of money.
There you go. Right? So if to save you a lot of money, definitely right here at 93 rather than at 93, 56, 57. So who do you think will be selling those? Well, that's at retail price point. So now a wholesaler is selling at retail, where buyers are just buying at 10 chickens a pop, right? Not buying in millions or hundreds or thousands. They're buying 1 chicken or 5 chickens or 10 chickens. So these are at retail price point now. However, if this is still at a wholesale price and you miss it at 93, and you know that you have to procure, say, another million chickens, you'll be spewing because now you're gonna spend another 50 cents per chicken times a million. That's $500,000 basically. That's a lot. You could save $500,000 if you basically bought it at 93. You know what I mean?
Yeah.
So this is where actually floor traders, they get really, really angry if they're not getting, if they missed out on the price. Because I want you just to imagine big top companies who are also buying and selling at the same price right there. And if Goldman Sachs bought, say, 10 million contracts at 93, and there is only, say, 15 million available, and Goldman Sachs bought 10, and there's only 5 available, You got to be quick in order for you to get that, because someone will get 2 million, someone will get all of a sudden that 3 million, and then you're coming in and you're late, and the next price now, the next lot will be at 93.20. You would have basically lost a lot of money, because you would have saved a lot of money if you bought it 93, similar to Goldman Sachs. See how that's the difference in terms of floor trading. When you're on the floor, you do not see charts like this. You're seeing the businesses or people or institutional businesses who are buying at those price points. How many are they buying? At what price? So they're seeing everything based on a supply and demand perspective. So that's the difference. Now,
So, okay, wow.
however, for us, on the other hand, because we are not institutions and we are not on the trading floor, or we don't have those type of algorithms, we're seeing a chart that is already late. So if you're even utilizing, so now say, oops, that moving average. If you put an indicator like a moving average, for example, oh, the price is now above the 8 and 10, and this is where technicals, such as using lagging indicators like moving averages, become so late, because it is the average between two midpoints. That's already at retail, yet that's also at the level of supply. And hence that's why in most cases you'll see the price will drop before we go back up again. And the reason being is that when there's also too much force and all the supply now is gone because the demand has been taken over, or make it this way, all the buyers bought it in order to get more buyers to be attracted to the price. What do you think they're going to do in order for more buyers? Or I'm not talking retail buyers, I'm talking about wholesale buyers. What do you think they're going to do?
They're gonna drop the price down toward the middle again, maybe.
Bingo, exactly. So
But how do you drop the price?
because right at this point it's already overbought, right? So they will drop the price through manipulation, that one person, whoever bought it over here, will be selling some over here. So if an institution, say, bought 10 million contracts and they're going to release 5 million contracts, they sell half of it. And what do you think that's going to happen? Based on manipulation, all of a sudden price will start to come back down to a certain price point. And this is where you'll see certain dojis like this, or you call your falling 3 patterns and stuff if you're into pattern, and the correctional price points of retracements happens. You're 38, 50, 62, and then all of a sudden, when you're seeing this, you're seeing your RSI, your momentum indicators, your oscillators, or any form of oscillator from an overbought to an oversold. And this is how it works. And retailers believe, it's dropping, so we might as well sell. And then you'll see something like that, and they're getting caught again. So,
Well,
if I held my position right there, I would have made money. See how those, in terms of candlestick patterns or the chart, basically that's how they work. But at the end of the day, when something is too strong, either yes, there's another movement of price to the upside, or it will stabilize depending on how it is, and the correction before a continuation will occur. And this is where how oscillation works, either to the upside or to the downside. Price cannot just drop in a straight line. It resonates, right? It oscillates from force to a lack of force to a correction to a continuation. Why? Because on the pendulum theory, have you guys heard of the pendulum theory of basic economics of supply and demand?
If I've read it,
I'm sorry.
did you ask if I read it?
No. Do you guys know about the pendulum theory?
I don't.
For some reason, I think I heard it one time, but no, I don't know about it, I guess. But I think I've heard of it before.
Okay, so what it is, let me just erase this. What it is this. Just imagine a pendulum that swings left to right, so based on supply and demand, where here in between buying and selling, and where it's neutral, is zero. So price in terms of buy, supply and demand. When it's swinging, so here is zero, it's neutral. Price becomes expensive when there's no demand and there's more supply. Price will go up and there's more demand and less supply. And so the part of what we call the pendulum theory is that price cannot just go pretty much in a straight line. So when there's a lot of demand, no supply, price will go up, and when it reaches to a certain price point, it becomes now too expensive. Demand will deplete. There's more supply, it will come back down, and then price will basically drop basically from there because now supply is now pushing where there's no demand. And then at one point, when there's no more demand or no more supply, there's too much demand, then the price will come back down again. And this is also what's happening in price. So here, in terms of neutrality, based on the pendulum, it's basically there. So there's no more simply supply at this point, or sellers starts to disappear, but because there's a lot of buyers supporting this price and there's no supply, and this is how price is going to the upside because demand or buyers are coming in where there's no supply, there's no sellers. Sellers are the ones in control, dictating in terms of what the price you want it, 99.340. And this is how market depth basically happens, right? So with market depth, you have a bid and ask. You have your bid and you have your ask. You have your price right there, and then you'll see the amount of contracts that's basically going in based on the bid and the ask. And it goes very quick, and all of a sudden the price is going up, but the price is basically coming back down. And this is how you see the supply and demand part of it. This is why if you know how to read that for day trading, then it becomes easy. Okay, so this is simply the mechanics from a basic fundamental perspective, where you're reading what the price is. And what becomes really challenging is now when you add other variables or factors like your indicators, just to dictate to be on top of your analysis, whether if there's more to go or not. So like say right now, well, the price is at supply, but it's too expensive. What would be a better price point of buying when it retraces a little bit? But the other question would be is, what if there is a continuation of price to the upside? Well, this is where your news comes into play. So it's not share. Let me just go through. Your news base happens. So you need to figure it out and see, are there any up and coming news for the US dollar? Well, there's two more, the core PPI, purchasing price index, and purchasing price index. And this is also where you have to see what it does based on what you're looking at. Well, it measures the change in price of finished goods and services sold by producers, excluding food and energy. So based on this, if the calculators for food and energy prices make up about 40% of our PPI, which tends to meet the importance of the core data, if the actual is greater than the forecast, it is good for the currency. So that's basically a Bureau of Labor Statistics. So purchasing price index, purchasing price of what? Okay, well, is the finished goods and services sold by producer, the producer of a certain product. So say even the retail industry, if say for argument's sake, let's take the chickens once again. So same thing. If say the services being sold is by chicken, whereas the producer is XYZ company, and if the change of price becomes more expensive, guess what's going to happen? Then what's going to happen with the currency? It's going to be good for the currency because it is pumping more. It's going to be, there's more, there's going to be some form of demand that's going to happen. Does that make sense?
Yeah, I think so. I think
Yeah.
I might have missed totally what you're trying to say, but I think I got it.
So yeah, the whole economy plays a very big role in terms of the macro fundamentals of it. And that's why the news plays a very big role. And part of that is simply, it will affect definitely, start share, going back to where we're at. Oh, it deleted it, dang it. I thought it will hold. And so basically from here, now you can see if we're taking out the big piece of the pie, notice simply that, oops, we don't want that. And you can see specifically that within this range, buyers are pushing the price because here, what happened in the past in terms of history, when prices were around this area, guess what? When it broke out, came back down with this area, they pushed it all the way back up in there. Similar to what's happening at this point, they push it back up in there. Currently, this is also a supply from this, but it got pushed off from there. But what happened over here though? It got broken with this bearish candle. So not unless an outside force will dictate that this is not as strong, if it breaks out, then it will retest back to 94.60. Either it will create a lower high or will create another new higher high, basically from there. And this is how now you can see the oscillation of trends. Okay, but inside of it, you will also have micro trend similar to this. But sometimes we are being caught that this micro trend is a macro trend. And this is where sometimes we choose to sell even further, expecting that the price will drop even further. But it doesn't happen. And why is it that retailers will sell at demand? Go. Likewise, now we're here where price is at supply. Even though it's a bullish candle, we cannot buy at supply. We wait for the correction to buy at a cheaper price. Now, but because the future is uncertain, we don't know, it's telling us to buy. Can we still buy at an expensive retail price point? You can, but low position size. We call it, or I call it, as test trade. You test trade it, Why is test trading important? Okay, so let's discuss about test trades. Number one, eliminates the emotion of regret. The shoulds, the goods, the woods. If only I ever should have bought some, or I hesitated, bam, I would have made money. So that is the emotion of regret. Two, gives the ability to profit. And three, eliminates basically the fear of abandonment. And then lastly, I think it's more number four. What's theory? Okay. So those are some of the reasons why basically test trading is very important actually in trading too. Okay, and so, but if it comes back even further, then yes, it is important to add in to the position because you know that analysis is simply going to the upside, so you're getting your better price point basically from there. A good example for me, or a good example, is basically the euro US dollar. Despite here, there was a sell on that lower high, but it overruled basically from there. And at the same time, based on retracement levels, opportunity, I mean, there's a probability it can go to the 62nd percentile because the price was around 38.2, not even. So saying from a lower high perspective, there's an opportunity. It broke out, didn't want to came back in, it went to 38, touched the 50th percentile. And then looking at this, and this is where I shorted actually in Sunday, my time. And like, oh, maybe there is that opportunity right there because from a correctional standpoint, from a bigger time frame, medium, like a weekly time frame perspective, this bearish candle plays a very big role. 2 weeks in order to correct itself. And if that lower high basically happens, definitely you can go to here to 1486 or the 50th percentile before it can go to the upside because it has to correct itself. So, however, said that if it doesn't work out this week, then I'm out. And so from there, basically I added in terms of the position from the test rate perspective, get a better price point. Currently, I'm way beyond in terms of positivity. So that strategy from a longer term perspective, medium to longer term strategy, shorter term it goes up. So what is happening basically from there, if you have, so I'm, having multiple accounts is important. You have a short term, medium, longer term account. So, or short term or medium to longer term account. In between, whilst price is going up, you're trading that to minimize the risk of your bigger time frame in terms of trade. And then as a strategy that if it's no longer there, you close and you short and you add into the medium to longer term. And so you're basically playing the game just in one pair if you wish to. So similar to what's happening with my dollar CAD, I still have a dollar CAD trade in there for longer term. So currently, I'm playing also the game with this one. Of course, emotionality, psychologically, definitely affect in terms of, because when price is against you, you're losing, and that will affect your emotionality of like, oh man, I'm losing, because nobody wants to lose. However, on the flip side, to minimize the risk, great, I'm gonna short it as well then on another account just to minimize it. And when price becomes cheaper again, bam, then I'm gonna buy it and I'm gonna double dip. So as long as you know what your plan is, you know what's really happening, is where you can create plan A, plan B, plan C. So there's multiple strategies that you can implement actually with one pair and with one trade. So yeah, so today's lesson is simply going back and utilizing utilizing the dollar index, just to give you an idea through here that where do you think this is going to go based on from our analysis. It could be bullish. So what's going to happen now with the euro? It's going to drop. What's going to happen with the rest of the other major currencies against the US dollar? Potentiality that it's also going to drop. And if this is going to go up, then the S&P as well now will potentially drop basically from here. If that lower high happens today, then boom, a higher low will occur somewhere before either we continue or price will continue to drop based on the bigger time frame. And what's happening with the volatility index? Yeah, see, the volatility index is not as strong yet. So maybe perhaps there's more room for this to drop. Who knows? But all these things, and in terms of synchronicity going through, all right, so where to from here? Why is it oil up when the dollar index is going up? So is it a manipulation or what's happening? It is also something that we need to discuss later on, or you to analyze in terms of the anomalies. And hence is why the TYX, you can see TYX has been leading. It is just now that the dollar index is going back up in terms of continuation. It was dropping, and why is the yield going up when the dollar is basically dropping basically from there? So that's where you can see in terms of leading indicators versus lagging indicators. Once you have that, this is your crystal ball. I see this as my crystal ball versus using indicators at this point because they're all lagging. Okay, so that is the lesson for today. Any questions?
I have a question. What exactly do you mean by point 3 eliminates the fear of abandonment? Abandoning what or who abandons what? I don't get this one.
So abandonment, fear of abandonment. Depending on if you're the only child, probably you're not going to be experiencing that. Third child, first child, and the third child through behavioral cognitive biasness when they have that experience, and then the second child comes in or the last child comes out. The first person will always, or the first child will always like anything, what's happening, like, they don't want to be left behind when it comes to parties or when it comes to certain discussions. They always want to be part of it. Last child, they don't really care because they know they're the last and they just do their own thing. And in most cases, they're spoiled because they're the last child. The middle child, on the other hand, is also really experiencing a lot of attention deficit. Hey, how about me? You're only giving attention to the last child and to the first child. How about me? And then the first child is always me, 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 me. Well, what's happening? What's happening? What's happening? So there's that issue right there. And when they start to trade, what happens? They don't want to miss out, so they will buy, even though it doesn't matter how expensive the price is, because they want to be part of it. Similarly, when it comes to keeping up with the Joneses, what's keeping up with the Joneses? Keeping up with the Joneses that next door, the neighbor basically buys a BMW. Ooh, all right, they bought a BMW. I'm gonna buy a BMW too, and then it's a competition, right? Because they don't want to miss out. These are trends. Social media. If you see through marketing, that's how they create it in terms of trends. Oh, they have the new iPhone. I'm gonna get the new iPhone too, because I don't want to be missed out. I don't want to be left behind because I want to be cool. It progresses there through society and through school too, to be part of the group, to be part of the gang, right? Oh, he's drinking, I'm gonna drink too. Oh, he's smoking, I'm gonna smoke too because I want to be cool. When they don't realize that's what's affecting them from a conscious state, but there is a trigger point that's causing on the conscious level, which is the subconscious level, is the fear of abandonment. So to eliminate fear of abandonment, well, you gotta get into the price, but you don't go gung ho. You might as well just get in just a little bit with a particular risk. And what is that risk? The difference of the current price that you're buying with the last low. That's your current risk. But if you're going crazy, like keeping up with the Joneses, even though you don't have enough money, but you want to keep up with them because to look good, and this is how poor people will remain poor people because they're pretending to be rich, even though they don't have anything, because of the materialistic things that is being given to them on an outside note based on trends. Latest Gucci watches, latest Gucci clothes, latest whatever, based on materialistic world. It is being driven by what we call the principle of the have do be principle versus the be do have principle. The have do be principle is being dictated according to psychologists or through research. It's based through the industrial age, after basically the Great Depression. And so forefathers basically said that if you go to school, you study hard, you get a good job, and then you'll be and then you'll be perceived as being successful. Therefore, B, have the American dream. That's also a very good advertising. Have the nice house, have 2 cars, have 2 kids, then you're living the American dream. But in reality, buy a house, being a liability, be in debt. Buying a house is a bad debt. You buy an investment property, it's a good debt. So see how things based on subliminal messages being given to people. And as long as there's control within the higher order, whoever that it would be, and this is why only 1% are very wealthy, is because of the order. People have to be set into whatever they have to be. That's why there's an engineer, there's a CEO, there's a president, there's going to be a janitor, a cleaner. And then based on whatever career that they do have, that's the only amount of money that they're willing to get. And I like Blink by Malcolm Gladwell. I highly recommend to read it. It's very similar to the experiment, the frog experiment. Put the frog in an empty glass jar, close that jar, put some holes in it so the frog would survive, could breathe. And what happens? The frog wants to escape, but doesn't want to escape. What does it do? It keeps jumping, keeps jumping. And then a few days later, they took the lid out. What do you think happened to the frog? Did it escape from the jar or did it remain in the jar? It remained in the jar because it got trained to jump to the level in terms of the jar. Human beings are also the same. We're just like frogs. We are being designed to go to school, and that if you're an engineer, the maximum that you're going to get on a yearly basis is $120,000 a year. That's $10,000 a month. So just imagine being trained over and over again to receive $10,000 a month, $10,000 a month, and you start trading. And this is also what happened to me because when I got out of work in 1996, my salary was $30,000 a year. make it like 3 grand basically a month. Keep trading and make 3 grand a month, 3 grand a month. And then out of nowhere, one day I made 20 grand in one day. Like, whoa, what do you think happened to the 20 grand? I gave it back. Why? Because my brain was trained to make $3,000 a month. That's how screwed we as individuals, because we've been hypnotized through subliminal messages given by the higher order. And then to be discussed, basically, that if you have the nice car, you have the nice clothes, you have the nice house, you'll be perceived as being successful. But that's not the case on the other hand. That's not the law of the universe. Laws of the universe dictate that if you see yourself as being successful first, you do the action, then you'll have whatever you want to have. And why do you think we get into trading? Because to have what? Freedom. Have freedom, financial freedom, or freedom of time. Not the other way around. Well, you have the time or the freedom and you will be something. But if you do the work based on your perception of success, commitment, passion, motivation, love, kindness, abundance, and so forth, then you will have whatever you will have. Because we've been, by right, whoever it is out there, what do you call it, God, the universe, the higher being, by right, that's what we already have, the freedom. But in time, that freedom is being suppressed based on outside factors that's being instilled within us that creates our belief systems. Isn't it cool? It's so profound, but yet people do not understand it, not until they fully understand the laws of the universe.
Yeah, that's pretty neat. Brain hurts some days for that, thinking of that.
Exactly. So I hope I answered your question there a little bit more in detail there, that you could also expand it right there for you, Dan.
Yeah, I got it. Just didn't understand what you mean with it, but it's clear now.
Cool. All right. Well, sorry they ran over time, but nevertheless, that's the lesson for today. Hope you enjoyed it. If
I
you
did. Thank you.
2 or 3 things that you learned today, please type it in the support group. That would be awesome.
All right.
All right,
Okay.
guys. Have a good evening. Have a good afternoon, lunchtime, and we'll see you guys later.
Yeah, thank you.
See you later.
Bye.
Bye bye.